Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the markets. Let's kick things off by having a look at today's economic calendar.
Today's market analysis promises to be an exciting one, with plenty of trading opportunities. The CB Consumer Confidence Report out of the USA is being released at 4 o'clock South African Standard Time and is going to be a Black Star event that you don't want to miss. Keep an eye on this report if you're a fundamental trader. There could be some fantastic trading opportunities to be had. But that's not all. We have a limited edition branded mug to give away to one lucky winner. All you have to do is like this video and answer the question in the comments. Which of the following is not a major currency pair? Is it A, Euro USD, B, USD JPY, or C, NZD USD? Don't forget to subscribe to our channel to be eligible to win. We'll announce the winner once we reach 300 subscribers, so stay tuned. Terms and conditions apply.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, it looks like the dollar bears are set to chalk up a second monthly victory of bets against the greenback. However, some traders are seeing green shoots sprouting from the battered currency on bets that the Federal Reserve won't cave in to pressure to cut rates later this year. The US dollar index has fallen by 0.47%, but recent economic data pointing to sticky inflation and a banking crisis that hasn't been as bad as feared has forced many to reassess their dovish forecast for the Fed's rate cuts, pushing treasury yields higher from recent lows. The euro, which makes up half of the weighting in the broader dollar index, could also play a role in the dollar's rebound, as markets are putting too much faith in the European Central Bank keeping rates higher for longer. Now let's look at the analysis for today on USDCAD. This currency pair is currently hovering just above that primary support level, and if we get a close above that 1.356 level, we could see a rally all the way back up to that next primary resistance at 1.37. Moving on to Wall Street, we saw a mixed close yesterday, with interest rate sensitive momentum shares weighing on the Nasdaq and US Treasury yields dipping as traders braced for a week of high profile quarterly earnings and closely watched economic data. The benchmark S&P 500 and the Dow ended the session mostly higher, while Microsoft, Tesla, and other mega caps pulled the Nasdaq into the red. Now let's shift our focus to the Dow Jones analysis. The US 30 has broken out of that descending channel and is now coming back for a retest. If we get a close above 33,880, we could experience a rally on this specific index all the way back up to that next primary resistance at 34,200. Moving on to commodities. Oil prices settled higher yesterday, reversing losses as traders grew optimistic that holiday travel in China could boost fuel demand in the world's largest oil importer. Brent crude settled up 1.3%, while US WTI crude settled up 1.1%. Last week, both contracts fell more than 5% for the first weekly decline in 5 weeks, as US implied gasoline demand fell for a year earlier. Now let's look at the analysis on crude oil for today. After yesterday's rally, crude is currently consolidating. If we get a close above $79 a barrel, we could see a rally all the way back up to $80. However, if we get a close below $78.40 a barrel, we could see this specific commodity sell all the way back down to that support level at 77. Lastly, let's finish things off with gold. The yellow metal rose this morning, extending a recovery into a second straight session as the dollar fell amid bets that the Federal Reserve could pause its rate hike cycle by as soon as June. The greenback fell to a 2-week low, having reversed most of its recent gains amid a resurgence in bet for a Fed pause, with some participants even positioning for a rate cut later this year. This scenario bodes well for gold. Looking at the analysis for today, the yellow metal broke through that resistance at 1,991 and is now coming back for a retest. Should the retest be successful and we can get a close above 1,996, we could see a rally all the way back up to those previous high points. However, should we break back below the resistance and close around the 1,985 level, we could see a decline back down to that previous support.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the force be with you. Cheers.